Hello and welcome back to London. We have our first Eurozone crisis of 2013 with Spanish PM Mariano Rajoy implicated in corruption charges. I've been speaking about that and other issues facing the markets with Chris Beauchamp from IG Markets. We really knew what the story was in January. We knew there was going to be a January rally. But hasn't the beginning of February shown how thin that confidence was?
It certainly shows, I think, how much complacency there was in the market. People got used to seeing it go up higher. They thought mainly the problems were off the scene. But as we've learned over the last few years, it's always the Eurozone that surprises people. And it really does come as something of a shock, just how something explode on the scene without any warning. I'm not sure it's the end of the rally just yet, but it's certainly a wobble was overdue.
Let's start by talking about Spain. Mariano Rajoy, the PM, has been implicated in corruption charges, charges which he denies. How significant could this be for the Eurozone and Spain's austerity drive?
I suppose the issue is, as we've seen with Italy, is a change of government. I mean, it's very early days yet, and he's nowhere near sort of resigning, but the calls may grow loud as time goes on. The problem is, would we see a new election? We know that opinion has shifted in Spain against the austerity measures, so might a new election bring in a government that was less committed to austerity? It is possible, but then again, most politicians in both Spain and Italy recognise the need for austerity, and they've also got Brussels and the ECB breathing down their necks about it. So you're unlikely to see too much of a move away from that, although markets won't like the uncertainty that goes with a new election if we get one.
Yeah, one of the interesting aspects of it has been that Mariano Rajoy, in the midst of this scandal, he gave a press conference with Angela Merkel. What does that say about Germany's role in the whole Eurozone crisis?
I think it just underscores the importance of Germany. Although we talk about sort of a Eurozone-wide initiative, it's always Germany as the main power in the Eurozone. And the fact that he had a press conference with Angela Merkel both sort of underlines how committed Germany is to supporting his government, and just also how important Germany is, how her view is taken into account in all the power centres of Europe. Yeah,
let's talk about Italy now. Silvio Berlusconi, of course, isn't unfamiliar with scandal himself. He's been doing his old tricks, buying football players for AC Milan, saying he's going to scrap unpopular taxes. What would his election, or his party's election, mean for the Eurozone and for markets?
I think a very similar sort of thing, perhaps a slight move back from austerity. It's unlikely to go down well in Brussels and Berlin. They've made their feelings rather clear on they prefer having Mario Monti as Prime Minister. They like having a technocratic government committed to austerity. So this could be a nasty upset. And it has been the one thing that was on the cards, the growing popularity of Berlusconi and his party is going to be something that's a problem for the current Italian government. It's not likely at the moment that they'll win, but a surprise victory cannot be ruled out.
Yeah, generally speaking, what's driving investor sentiment from here? Are we back to looking at fundamentals, or are markets and investors very wary about these shocks from the Eurozone?
I think it's delivered a useful wake-up call that we can't ignore the Eurozone, or we ignore it at our peril. It won't go away. It's not the sort of crisis that can go away anytime soon, but it doesn't detract from the underlying theme that fundamentals are improving. The US economy, despite that shock GDP reading, is getting better. Emerging markets are still growing and companies are reporting better earnings, so there are still reasons to be confident.
And what are you expecting from the FTSE? Will the FTSE be trading flat?
Well, we've had an excellent start to January, 6.4%, one of the best gains in the FTSE's entire history. And what history shows is that usually when you've seen a gain of about 6%, you go on to have a very good year. Now, there's no certainty of that, but it doesn't mean that the rally is over by any long stretch yet.
I'm wondering, do we have to separate these indices like the FTSE from the economic reality? Because although the situation in the US is improving, the situation in the UK and Europe still isn't particularly great.
No, and certainly confidence indices have shown that consumers and businesses remain cautious. But that, in a sense, is a good thing. The last time markets were this high, before the financial crisis, everyone assumed that the good times would go on forever. Now we see a far more sceptical approach. And that, in a sense, is a very good thing. People aren't getting too overextended, businesses aren't hiring too much. And it shows there's still room for growth.
Well, we'll keep across those stories here on Dukascopy TV, but for now, goodbye.